Hello viewers, good afternoon to all of you. Welcome to the new session of e-learning class of UN Autonomous College of Science and Technology. I am Rasmi Ranjan Mishra, lecturer and head of the Department of Bachelor of Business Administration. Today I am going to discuss relating to basic financial accounting. So on today's discussion will be discussed relating to classification of accounts, the golden rules relating to accounts, journal, the procedure of preparing journal. So one by one we will discuss everything. Listen carefully. So this is the classification of account. Basically account is classified into two parts. One is personal account, second one is impersonal account. The personal account is divided into three parts, that is natural personal account, artificial personal account, and the third one is representative personal account. In case of impersonal account, that is again divided into two parts. One is real account, second one is nominal account. So real account is subdivided into two parts, that is tangible real accounts, second one is intangible real accounts. So what the accounts are, we will discuss everything one by one. So first we will give to focus on personal accounts. The accounts which are either directly or indirectly related to individuals, companies, firms or organizations are known as personal account. So personal account basically related to the persons. The persons may be human being or individuals, may be any type of organization or company or firms or association of persons. So there are some of the examples relating to personal account. One is Kumar account, second XYZ private limited account, capital account, prepaid account, bank account, drawing account, creditors account, outstanding account, debtors account, suppliers account, etc. So all the examples mentioned under personal account all are related to persons. That persons may be human being or individual, or maybe a company or firms or organization, whatever may be. So the accounts basically which is related to persons, that persons may be natural person or may be artificial persons or that represent to persons. So that is coming under your personal account. The next part, that is relating to golden rule of personal account. So how the accounts that relate to person is recorded at the time of preparing books of accounts. There is a golden rule. The rule relating to personal account is debit the receiver, credit the giver. That means the person who receives anything, that person is called as the receiver, and in that case when the person receives anything, in that case that account must be debited, and the person who gives anything, in that case that person is called as the giver, and their account must be credited. So one example of a personal account, that is Ram paid rupees 30,000 cash to Hari. So that means here Ram paid means Ram is the giver, and Hari receives means Hari is the receiver. So Hari's account is debited as per the rule because debit is the receiver, and Ram account must be credited as Ram is the giver, and the rule is credit is the giver. So Hari account debit to Ram account. This is the rule relating to personal account, and the one example by applying the rule relating to personal account. Then the classification of a personal account. The personal account may be classified into three parts, that is natural personal account, artificial personal account, and the third one is representative personal account. So come to first, that is natural personal account. Basically natural personal account that related to human beings. That means the accounts which are created by nature, or the persons those are created by nature or by God, they belongs to natural personal account. These accounts are related to human beings, that is natural persons who are created by God, and they possess a physical existence. So basically natural personal account, as it relates to human being having some physical existence, and as they are created by God or created by nature, that's why it is called as a natural personal account. So all human beings account coming under natural personal account. Sam's account, Maya's account, capital account, debtors account, creditors account are some of the examples that come under the category of natural personal account. The second one is artificial personal account. Second among three types of a personal account is artificial personal account. These accounts do not have any physical existence, however they are recognized as persons in business dealings. Most often they are legal entities created by human beings. So artificial, that represents created by persons. So that's why it is called as a artificial personal account. That means the accounts those are created, or the organizations those are created by the human beings, or the legal entities those are created by the human beings, they are having no physical existence. That is called as a artificial personal account, and that's why they are recognized as persons in business dealings. So there are some of the examples of artificial personal account. Any type of a public or private company account, that is coming under artificial personal account. Bank account, that is coming under artificial personal account because it is created by human being. Club account also coming under artificial personal account. Insurance company account, NGO account, cooperative society account are some of the examples relating to artificial personal account as they are created by the human beings. So these would fall under the category of artificial personal account. The third category of a personal account, that is relating to representative personal accounts. This account is different as compared to other two types of a personal account, as it refers to accounts which represent person or groups. That's why it is called as a representative personal account. That means the accounts which represent to persons or group of persons, and that is not directly their account but it represents and is linked to them, that it is called as a that is called as a representative personal account. So there are some of the examples of a representative personal account. One is outstanding expenses account. So outstanding expenses means the expenses already incurred but that is not paid. That's why it represents to the person. So that is called as a representative personal account. Prepaid expenses, that means expenditure which is paid in advance. So when expenditure paid in advance, that indicates to the person to whom that is paid in advance. So as it is relating to a person, that's why prepaid expenses is called as a representative personal account. Accrued income, income received in advance, unearned income. So in every cases, as these are the type of expenses or incomes and their account to represent to person, so it is coming under representative personal account. Then the second category of account, that is impersonal account. Under impersonal account, the account is divided into two parts. One is real account, second one is nominal account. So come to the real account. Any kind of assets which is either tangible or intangible are categorized into real account. So real accounts are those accounts which are coming under various types of assets. So that assets may be tangible or intangible. Tangible means which can be seen, which can be touched, having shape or size, that is called as tangible real account. Intangible real accounts means which cannot be seen, which cannot be touched, but which are feel. So that is called as intangible account. So there are some of the examples of a real account, may be tangible or intangible. That is furniture account. It is coming under tangible real account. Goodwill account, that is coming under intangible real account. Cash account, that is coming under tangible real account. So few examples of real accounts are there. The next part, that is relating to golden rules of real account. So in case of a real account, the rule is debit what comes in and credit what goes out. That means what enters into the business, in that case that must be debited, and what goes out from the business, that account must be credited. So there is one example. Mr. Joe purchased furniture of rupees 75,000 for cash. So in this case, the transaction is purchase of a furniture, and in this the furniture purchase in terms of a cash. So one aspect that is relating to furniture, that is coming under tangible real account. Another aspect that is relating to cash, so that is also coming under tangible real account. So when furniture purchase, that means the assets comes into the business, so furniture account must be debited. And when cash is paid, that means cash goes out from the business, so cash account must be credited. So furniture account debit to cash account. As per the rule of a real account, debit what comes in and credit what goes out. Then come to nominal account. The accounts which are associated with income, gain, loss or expenses are known as nominal account. So any type of accounts if that relates to income, or that is a case of expenditure, or that is a case of a gain, or that is a case of a loss, so that is coming under nominal account. So all type of income, expenses, gain or loss coming under nominal account. At the end of a remaining balance of a nominal account are then posted to capital account. So at the time of preparing the accounts, if any balances that relates to nominal account, that must have been posted to the capital account. So there are some of the examples of a nominal account, that is rent account. So that may be one type of income for the business, or maybe that is expenses for the business. So when rent is received, that is case of income, that is coming under nominal account. When the rent is paid by the organization, that is a case of expenditure, that is also coming under your nominal account. Salary account, when salary is paid by the organization to their employees, that is a case of expenditure. So being an expenditure, salary account is called a nominal account, or that is coming under nominal account. So the next part, that is relating to golden rule of nominal account. That means debit all expenses and losses and credit all incomes and gains. So if that is a case of expenses or that is a case of loss, that means that account must have to be debited. And if that is a case of income or that is a case of gain, then that account must be credited. So an example is there, paid rent of rupees 5,000 in cash. So when rent paid means that is a case of expenditure. So rent account must be debited as per the rule. Debit all expenses. So being rent is an expenses, so rent account must be debited. And another one is 5,000 paid in cash. So cash, that is goes out from the business. So as per the rule, what goes out from the business, that is called as a, that account must be credited. So rent account debit to cash account. Being cash is a real account, as per the rule of a real account, credit what goes out. So cash goes out from the business, and rent being one type of expenses, as per the rule of a nominal account, debit all expenses and losses. So rent account debit to cash account. So these are the various types of accounts. That is a case of a natural personal account, artificial personal account, or representative personal account, and that is a case of impersonal, whether may be real or nominal. The various accounts and their golden rules relating to the rule of debit and credit that we have discussed. The next part, that is related to journal. So what is journal, how that has to be maintained at the time of preparing books of accounts, that we will discuss. So the meaning of a journal, it is a list in chronological order of all the transactions for a business. So journal is the book of original entry in which daily transaction of the business recorded chronologically, either day wise or date wise. So when a transaction that affects to the business, as soon as the transaction made, we must have to record it in the books of account, and the first part of the books of account is called as the journal. So that's why it is called as the book of original entry. So it is derived a French word, that is jour. Jour means day or daily. So when a daily transaction of the business are recorded chronologically, serially, that may be either day wise or date wise. In that case, that transaction or that books of account is called as the journal. So it is the first or the original book or the prime entry where daily transaction of a business recorded chronologically. So this is the format of a journal. First column, that is date, second column, that is particulars, the third one is that is voucher number, the fourth one is ledger folio column, then the last two, that is debit amount column and the credit amount column. So the date column, that means when a transaction is made on that particular date, we must have to record it on date column. The particulars means the journal entry must have been made in a particulars column. That means one or several account must be debited and one or several account must be credited. As per the concept, dual aspect concept, there must be debit and there must be credit. Then if the voucher number respective different accounts mentioned, then we must have to be mention the voucher number in the voucher number column. Then the ledger folio, that means the page number, if that is mentioned in the question, then we have to maintain it or record it in ledger folio column, and the amount of debit recorded in corresponding debit amount column, and the amount of credit that must have been recorded in corresponding credit column. As per the format, the transaction must have been recorded in the books of original entry or journal when that transaction affect to the business. So what is journalizing? The process of entering the transaction or the process of recording the transaction in the journal is called as journalizing. So journalizing is a process when that process has been made to record the transaction in the books of original entry or prime entry. That process of recording the transaction is known as journalizing. So what are the various steps involved in journalizing? The first one is identify the transaction from the source document. Whenever any transaction that affect to the business, First, we must have to be identify what the transaction is and who are the aspects that affect to the transaction. We must have to be identify that transaction from the source document. Second one is specify the accounts to affected. The transaction, after identifying that from the source document, we must have to be classify that transaction as per the classification of account, that may be personal account or impersonal account, that is real or a nominal account. So we must have to be specify that accounts as per the transaction affect. So that is the second step of journalizing. The third one is apply debit or credit rules to determine which accounts are to be debited and which accounts are to be credited. After specifying the accounts, we must have to apply the rule of debit and credit. As per the rule of debit and credit, in case of a personal account, real account and nominal account, we must have to be debit one or several account and a credit must have to be given one or several accounts. Then the record the transaction as per the particular format or the specified format. So after applying the rule of debit and credit, we must have to record it as per the format mentioned in the journal. So this is the steps involved in journalizing. Then the next part, that is recording transaction in a journal. How the transaction is recorded in the books of original entry or in the books of a journal. How to record the transaction? There are various processes. The first one is enter the date in first column, that is called as a date column. We already mentioned the format of a journal, the first column, that is date column. So when a transaction affect to the business on that particular date, as soon as the transaction affect to the business, we must have to mention the date in the respective date column. The second one is in particulars column. The second column that relates to particulars column, and in particulars column enter the name of the account debit at extreme left of the column or abbreviation as DR dot at right end of the particulars column. So that means in particulars column we must have to be record the transaction as per the rule, that is one or several account must have to be debited and a one or several account that must have to be credited, and that must have been recorded in a proper format. That means the account which is debited, we must have to be mention the name of the account in the particulars column, that is extreme left of the column, and a debit or DR dot that must have been mentioned at the extreme right end of that particulars column. Then the third step, write the amount of debit in debit column. If the voucher number and ledger folio column is the or ledger folio page number is not mentioned, then directly we go to the amount column, and the account which is debited, accordingly the debit amount must have been put into the debit column, and in particulars column enter the title of the account to be credited, intended to write preceded by the word to, and write amount in a credit column. So when one or several account debited, then other several accounts or one account must have been credited as per the dual aspect concept. So when debit part is over, then another part, that is credit. So when the account is credited, before writing that particular account name in the particulars column, we must have to be mentioned the word to. So the credit account before that must have been preceded by the word to, and the credit amount must be mentioned in the credit amount column. Then insert the narration, which is a brief description of a transaction. After recording the transaction in the particulars column with respective amount, we must have to be mentioned a brief description about that particular journal or about that particular transaction. So that brief description or short description about the journal or about the transaction is called as a narration, and that must have been always started with being. So insert that narration with a brief description of transaction in the particulars column after the transaction recorded, that means one account or several account debit to one account or several account credit. Then draw a line across the particulars column. After narration over, we must have to be draw a line, and in the particulars column we must have to put a line across the particulars column. That means that transaction relating to the particular date is over, then we have to record the another transaction relating to another date or that relates to same date. Then next part, that is journal entry, an analysis of the effect of a transaction on the accounts usually accompanied by an explanation of the transaction. So journal entry means when a transaction entered in the format of a journal or the books of accounts with every description. In that case, the analysis of the effect of that particular transaction or the accounts usually accompanied with a certain explanation of that particular transaction, and that is called as a journal entry. That means this analysis identify the accounts to be debited and accounts to be credited. So when a transaction over, after putting a straight line across the transaction, that means that indicates or that provides the analysis of that particular transaction. That means how much amount is debited or how much amount is credited, or which account is debited and which account is credited. So that identify or the analysis identifies the accounts to be debited and accounts to be credited. Journalizing, there is one example of a journal entry, how that transaction is recorded in the format of a journal, or what is the journal entry of a particular transaction. So there is one transaction, the transaction is made on 1st April. Garage invested rupees 30,000 in Gillen travel. So how we have to record that transaction in the books of a journal? The first column, that is date, we must have to mention the date is 1st April. Then the second column, that is particulars, we must have to record the transaction in the form of a journal entry. Then the next two column, that is debit and credit, we must have to record the debit amount column and the credit amount column. As per the dual aspect concept, the amount which is debited, that must equal with the amount to be credited. So the transaction is Garg invested rupees 30,000 in Gillen travel. So we must have to be analyze that transaction and we must have to be follow the process of recording the transaction. So first identify that transaction. Which are the aspects involved in the transaction? One is Garg. Invested means Garg is the owner. So amount invested by the owner, that is called as capital. And when the owner invests the amount in the business, that means cash comes into the business. So there are two aspects. One is cash, second one is capital. So we must have to be identify that aspect and determine the accounts to which these aspects are related. One is cash account, second one is capital account. Then apply the rule of a debit and a credit. That means cash, that is coming under real account, capital, that is coming under personal account, representative personal account. So as per the rule of a debit and credit, cash being a real account, so the rule of a real account, debit what comes in, credit what goes out. So when cash invested by the owner, that means cash enters into the business or comes into the business, so cash account must have to be debited. And when the owner invests the amount in the business, that is called as capital. So capital, that means the person gives, so that is representative personal account, and capital account is credited. As per the rule, so the cash account debit to Garg's capital, being Garg is the owner, so that represents Garg's capital, and the transaction is cash account debited to Garg's capital. Respective debit amount column, that is 30,000, and a Garg's capital, that is 30,000. So dual aspect concept says that for every debit there is a corresponding credit, and the amount of a debit must equal with the amount of a credit. So the total debit amount, that is 30,000, and the total credit amount also 30,000. And there is a brief description about the journal, that is called as a narration, and it is always started with being. So we must have to be mentioned that within bracket being received initial investment from owner. That means the Gillen travel is the business, and the business received the amount from the owner Garg. So received initial investment, this is the first time investment of rupees 30,000 by Garg. So received initial investment from owner. This short description about the journal is known as narration, and narration is always started with being. So these are the process of recording the transaction in journal. So this is our today's discussion relating to classification of accounts, golden rules of accounts, and the journal, preparation of a journal or the journal entry. In our next class, we will do a practical problem of a different transaction recorded in the books of original entry in the journal. Thank you. Have a good day to all of you.